Hi, everybody. Welcome back to TSAM Digital. Today, I have with me Daniel Johnson. Daniel is going to be representing SS&C. To begin things off, I will ask Daniel to give us a brief introduction about himself.
Hi, my name's Daniel Johnson. I work in SS&C in the Fund Services Group, where I manage a portfolio of clients. I also am leading the SS&C development of ESG solutions.
Brilliant. And Daniel, could you also let our audience know a little bit about SS&C?
So SS&C is a company that focuses on software and solutions, particularly in the asset management space. Obviously, I'm on the asset management side. We tend to work with hedge, private credit, private equity in the real asset space in terms of providing fund solutions across administration, regulatory reporting, systems, software. You name it, we're probably involved in it. It'd be fair to say I think we're probably, if not one of the largest fund services companies in the world.
Excellent. Thank you very much for that, Daniel. My first question is, so long ago, it seems, are the days when a firm held only one social responsibility, maximizing shareholder value. Now companies are expected to deliver strong financial performance within the context of responsible environmental, social, and governance practices. Investors are clearly taking note. How are investor expectations changing in this new landscape?
I think several of the large investors with the very long time horizons are focused on what their members or beneficiaries want when it comes to things like a positive ESG outcome. I think it used to be more focused just on performance, but I think now it really is performance, but also an element of, I don't want to say ESG good, but actually trying to sort of do things for the sort of wider world. I think this isn't going to change in the near future. I think when you look at the global events that are happening now, I mean, the issues with energy pricing, the environmental issues that you can see in South America, in North America, across Europe. And then I think on top of all of that, you've now got the COP26 summit coming up, which I think that's going to be, I wouldn't say a game changer, but I would be amazed if more things don't come out of that, which again will sort of impact the asset management space and the way investors look at things. I think going along with that, I think you've got numerous studies have shown that the vast majority of companies that do focus on ESG have had either neutral or positive performance relative to the market. So I think investors and managers now have seen this and feel that they can invest in these, we'll call them good actors, without getting that feeling that you're sacrificing anything on the performance side in the medium or even the long term. I think there's now enough data and studies sort of going back 5 or 10 years that it's pretty hard to say that, no, it's just about performance and we're just going to ignore everything else. I think in terms of trends, you can see that some managers moving away from maybe the negative screening part of ESG, where it was mainly focused on we just didn't want to be in a particular asset class. So, I mean, the obvious one is things like alcohol, and probably even going back further than that, it's tobacco. Being a bit more of a focus towards best-in-class type screening, which is we kind of accept that you're okay to invest in sort of what I would call them sensitive sectors, as long as you're investing in the companies that are really trying to make a difference in that sector. So, I mean, the classic example right now is fossil fuels, where a lot of the fossil fuel companies are actually sort of moving away from fossil fuels, or the energy companies, I guess, are moving towards sort of renewable energy. So that it is okay to invest in a company that's predominantly fossil fuel if they're clearly trying to move towards that sort of renewable energy space. And I think finally that the impact investors, you can see that they're actually, as an example, are really sort of stepping into that and actually sort of making a big change in this area. And the best example is, I think you saw with I think it was the very small asset management company that managed to get 3 new board directors onto Exxon's board. And they were supported by enough of the large investor groups that could make a real change. And I think up until then, there was possibly a belief that while you could try and encourage managers to change, you couldn't force it. But then watching Exxon's preferred directors actually get rejected by the investors, that was, I think, that might really be a game changer in terms of corporate governance going forward.
Brilliant. Clearly, regulators, particularly in Europe, are trying to provide a framework to guide and compel managers to define and evidence their ESG practices. What are some of the major regulatory initiatives, and where is this trend heading, in your opinion?
I agree regulators are taking notice by classifying ESG-based products such as SFDR in terms of Articles 6, 8, and 9. And I think transparency in terms of regulatory and investor reporting is becoming more of a norm. I think there is definitely demand from investors and expectation from regulators that people are actually looking into the data and are producing reports. And I think the more that becomes the norm, I think the more managers will just do this anyway. I think up until now, there has been sporadic reporting or almost anecdotal reporting by managers based on the conversations we've had. But I think we are going to see that change. Once you're compelled to produce a report for a regulator, sort of almost sharing an identical report with your investors or with your directors or with your stakeholders is pretty much normal practice. I mean, SS&C, we're designing SFDR solutions for our clients. And one of the things we're designing is not just the report that goes to the regulator, but a more easily viewable and understandable report that a manager could then give to their directors and to their investors, because we think they will be interested in how people are answering the questions. I think that part of SFDR, or the introduction of SFDR, is going to be a game changer, but I think it's also going to encourage managers to maybe look into areas that they may not have looked at. If you look at the principal adverse impact statements that the managers are going to have to report against, some of the mandatory reporting requirements are going to require quite a bit of investigation. I think I've been talking to consultants and managers, and the question that stands out for me is the biodiversity impact question, and exactly where that data is going to be sourced from and how managers are going to report it, because it's almost like a stretch reporting requirement. It's not easy, I think, for managers to go and get that data, but I actually don't think that's necessarily a bad thing, because at least it's encouraging people to go and look at beyond, what is my CO2 emissions, what are my greenhouse gas emissions, and I think that's in some ways a good thing. I think that when it comes to regulation, the one that is actually, well, you've got SFDR, which is out there now. The one that I think that really could actually change everything is going to be TCFD rules. Mm-hmm. It looks like the UK is going to be implementing that in the kind of almost now, with reporting in 2023. And I think it's the single most likely regulation that's going to be followed globally. Either follow the TCFD rules or something similar. I think introducing that into the other markets, and particularly the US, would make a real difference, I think. So I guess we'll just have to wait and see how that pans out. But I do think with COP26, it will be, if any other countries or leaders use that platform to sort of talk about that further, and maybe agreeing to sign up to sort of encouraging their managers to report against those rules.
Absolutely. So while the surging popularity of ESG represents an avenue of growth for investment managers, it also presents significant operational challenge. How can firms stay on top of it all, and what are service providers doing to address those challenges?
I think, as you pointed out there, that the lack of standards for defining, measuring and reporting on ESG was inevitable during the early stages. But I think this may be now hindering the industry. We know of at least 100 plus ESG data vendors out there, and it must be really challenging for a manager to know what the data is telling them without understanding how all the ratings are derived and the sources that are used. Again, talking to some managers recently, we spoke to one manager who actually contacted, I think it was 9 or 10 different data vendors, and still didn't actually have all the data they felt they needed, even if they signed up with all 10, to actually monitor and track everything they think they need to. Again, particularly as it relates to SFDR. I think for managers, they're looking at this as there is an infinite amount of data that they could sort of try and get in, but actually getting that in a sort of usable and manageable format is a challenge. I think it kind of comes to that, it's like that thing, but the difficult part of the journey is that first step. It's almost like, okay, so what data can we take in now? What can we use it? Right. And then once we've got that right, let's build it. let's move on to the next step. What other data do we need? Can we go back to our first vendor or our first source and then either ask them to provide us with more data or look to expand on that? And I think that's the sort of direction managers have gone. And I think from a service provider point of view, we're kind of in the same situation. You know, we're looking at, well, we want to meet the needs of our existing clients, our I guess, the clients that we're, or the prospects that we're talking to. But it's not, we can't deliver every solution for every manager on day one. So we kind of started out with a sort of suite of sort of more standardized solutions, some of which, I mean, are, you know, not overly complex. But the idea was to provide investor transparency in terms of ESG risks. But then we've built on that now by adding carbon reporting, looking at fossil fuels, looking at carbon solutions, and then based on a requirement from a couple of managers, something that focuses on sensitive sectors. But we're kind of building it one at a time. We're not trying to give everybody the universe on day one. We've also discovered that for managers, they're quite keen to sort of develop and build a solution they think works for them. So they're quite interested in the idea of, well, what data can they share? What data can we help them provide? What kind of reporting do they think they need? And again, it's not a simple start, but you almost feel with every manager, you need to start somewhere, and then you can kind of build and evolve over time, rather than saying on day one, I must have the perfect solution that will last me the next 10 years. I think it's a challenging time to be in, but at the same time, I think it's quite exciting. I think the other thing worth mentioning is when it comes to managers, a lot of it is just about being transparent. When we talk to managers, they are actually willing to share information, but it's trying to get them to sort of agree on, well, what do you want? How often do you want to share it? Who do you want to share it with? How are you actually how can we help you sort of build the reports and solutions you need? And again, it's an interesting journey for us to go on right now. We're having a lot of workshops with managers where we're sort of sitting down with that blank piece of paper going, okay, so where do you want to start? We can give you some ideas, but you kind of have to map this out. And yeah, it's works challenging, but fun at the moment.
Brilliant. Daniel, we're reaching to the close of the interview. One last question before I let you go is, if you were to look into the future with your crystal ball and predict the next phase for ESG, what would it be?
I think as of now, I would say, I think we're going to get hopefully clearer regulation. I'm not suggesting we need lots more, but I think TCFD I think is inevitable, and the implementation of the requirements around particularly environmental type reporting. I think it would be great if governments and regulators actually work with asset management industry bodies to sort of help define that, because I think people like AIMA are more than happy to work with regulators to actually define something that's sort of both usable and workable. We don't want to produce endless reports that no one looks at, or data that no one wants or needs. I think COP26 will lead to more promises. I'm just imagining the amount of politicians, the amount of microphones, the amount of news coverage, and you just don't see how many promises are not about to be made in the next few weeks and months. I think there's going to be additional opportunities for managers who actively integrate ESG monitoring into their investment process. I think, you can see this. We are talking to some managers who are very proactive, who have actually sort of been doing this for a while, and they're already sort of thinking 2-3 steps ahead. I think there are many investment opportunities for people like that. And we're also talking to a consultant saying that, there are companies out there who can see that who've had significantly improved performance over the years because they've sort of changed their focus. They've not looked at ESG is not just a cost and a risk, but it's actually really an opportunity to grow their business or sort of refocus. I think we're also going to see, or we could see from the US administration, actually concrete action in terms of what they're going to do in terms of requirements from companies, from managers, maybe being a bit more proactive, I guess. And I think if it's almost like whatever the US government or administration do or encourage, the rest of the world will follow, because you just have that ripple effect around the world. And I think I would say that I'm an optimist. I think that asset management companies, the finance industry, can kind of change the world. I don't think it's just about, I don't want to disparage anybody. It's not just about protesters. I think, but it's amazing if you direct money in the right places. sort of the innovation that I think that could take place. It's more of a, so I guess I'm overall an optimist about what's going to happen in the next few weeks, months and years.
Absolutely. Thank you very much, Daniel, for your time. Really appreciate it. And thank you, our viewers, for joining. And don't forget to join us and SS&C at TSAM London Live next week. Thank you.